Welcome to the 45th episode of Dividend Investing Insights, your one stop for all things dividend investing. Join us as we explore high yield shares, dividend growth strategies, and portfolio management techniques to maximize your investment returns. Subscribe now and take care of your financial future with the power of dividends. In the episode today, we will continue to look at the portfolio that we have built. However, like always, we'll start with a quick recap of the markets. Overall, the markets did well in spite of the feud that is emerging between Donald Trump and Elon Musk. We'll see how that impacts the market. However, for the last 1 week, S&P 500 went up by 103 points to end at 6,036 points. Nasdaq too did well to go higher by 466 points to end at 19,529 points. And here locally in Australia, the ASX 200 also went up by 81 points to end at 8,515.7. However, as I've said, stock market share prices will go up and down all the time. However, you as an investor should invest in stocks that have the ability to pay dividends now, increase the dividends in future, and the companies are fundamentally strong. The whole intent is that your investment is not at risk. Anyway, let's do a quick recap of the portfolio that we have built. We first bought KDP 50 at 37.46, then we bought JP Morgan Chase 10 at 210.5, AT&T 100 at 21.91, CVS Health 30 at 60.3, and Unilever PLC 33 at 61.32 for a total investment of $10,002.76. And this is what our objective was. We had $10,000 that we wanted to invest, and we want to see as to how this would be performing at the end of a year. Anyway, as of this recording, KDP is currently trading at 32.77, JP Morgan Chase is trading at 265.73, AT&T is currently trading at 28.08, CVS Health is trading at 63.58, and Unilever PLC is trading at 63.02 for a total portfolio value of $11,090.86. However, that's not all. Since the time we have started investing in this portfolio, we've got dividends for October, November, December of 24, January, February, March of 25, and right now are in the process of getting dividends for April, May, and June of 26. And which has resulted in dividends available to us in cash of $247.72, making our total portfolio to be worth $11,338.58. Putting it graphically, this is how it looks. The orange line is our investment. The orange line is the current value of the portfolio. The blue line is our investment. Currently, at 11,300, we are roughly 13% higher than our investment. However, this has come about only in 6 months, which means that this portfolio is returning a whopping 26%. However, we'll wait till the end of the year to see where this is. We had the full portfolio ready somewhere in November. We'll see as to by November where this is. And my guess is that this would be between 15 and 20%. However, we'll see how much we get. For now, we have been monitoring the companies that we have. We have been monitoring the financial health. The companies are in good financial health. None of them have dropped the dividends. In fact, some of them have increased the dividends since we have invested in them. So we'll continue to monitor it and keep on collecting the dividends each quarter. Anyway, moving forward, what are the upcoming dividends that we have? We have Unilever PLC that will be paying out 52 cents on 13th of June. So we'll claim this dividend this week and then start to wait for dividends for the next quarter, which would start to come to us from July. As we end the episode, putting up the dividend investing checklist again, use it to make your investments. Happy investing, and see you in another episode of Dividend Investing Insights.